Welcome to the Real Estate Explainer podcast, where we talk about anything and everything real estate. I'm your host, Brian Kiczula. Welcome back to another episode of the Real Estate Explainer. Today I've got Benson on the podcast, and we're going to be talking about a company that he's a co-owner of, Privy, and his investments in multifamily property. Let's jump right into the episode. Benson, thank you for joining us on the podcast today. I would like to do a deep dive into Privy. It's a platform that I just think is really cool. And as one of the co-owners, I just feel you're going to be the best person to pick their brain on it.
Yeah, so I've been in the real estate business for over 20 years. I'm currently a licensed real estate agent. I'm also an investor. Got started back in like the 2002 timeframe. I was actually active duty military at the time. And I was looking for what I was going to do next. And so I started to do mortgage loans. A friend of mine was doing mortgages, and I was always interested in real estate at that point. I was listening to CDs. This tells you how far back I go.
Carlton Sheets.
Carlton Sheets is one of the guys I listened to. Robert Allen is another guy, and I actually got to meet him a couple of years back. But I was always interested in real estate, so I started to do my own deals. So I started to do fix and flips, wholesale, buy and hold. I'm still a licensed agent. I still invest. I'm transitioning from investing in just single family properties at this point and converting all of my portfolio into multifamily. And now I'm investing in multifamily properties. I started a real estate fund, doing syndications and looking at markets like North Dakota and some of the areas that are going to benefit from some of the economic changes that are happening post-election.
Very cool. We actually have a very similar path. I got started back in 2002 in San Diego, and it was in mortgages as well. I got my real estate license in 2002, then broker's license in 2004. It's interesting the way that careers transition over the years. Could you tell us a little bit about your current role at Privy, and then let's dive into the platform a little bit?
Yeah, so my role has changed and evolved over the years. Early on, everything that was customer front, I was involved with or was in charge of. So I did all the training, I did all the sales, I did all the business development, the re-engaging of customers, people who wanted to cancel or transition. And then as our team started to grow, I was able to offload some of those roles. And now we've got a full staff of people who work with our customers on a day-to-day basis. And I've got to specialize more in strategy for making sure our users have the proper onboarding and have the right training. I get to help people with training and what they're doing in the software every single day. And the cool part about it is that I'm also an investor. So I've got context into how people are using it. So there was a time period in Privy's history where our trainers weren't investors. And so they would train people like on what buttons to click, a certain thing, or where in the software you could go to do this thing, absent of context. So I really wanted to make sure that we still had context there so that when someone says, how do I run this filter? Then I can ask, what are you trying to do? Really, what's the goal of the filter? They're like, oh, like I want to find buyers. And I'm like, oh, cool. I find my buyers the same way. Let me show you how I do it. Get into how I use it to find buyers on wholesale transactions. Or an agent comes and says, I really want to make sure that the people who I share our live CMAs with and send deals to, like, that I'm putting my best foot forward and they can see my expertise. And so I'm like, all right, cool. We have to work on your profile. So here's how you build out your profile so you look more professional. Here's how to have the best bios so that people want to engage with you. And so context is really important in the way that I train our users to use the software so they can get the most return on that investment.
Okay. And for our listeners, they may not fully understand what Privy does. Can you walk us through what does Privy do and why is it so powerful?
One of the things I've learned over the last decade or so is that people put real estate technology in one bucket. I've heard people call Privy a CRM. I've heard people call Privy a data platform. I've heard them compare us to REI Black Book, which is like a CRM that's mostly focused on lead management. And there are buckets within this world of prop tech, which is what we fit into, property technology. And Privy is the best at tracking real estate markets. We track every single real estate deal in the nation. We can see what they bought it for, what they sold it for, how much money they made. We have before and after pictures on flips. And so we take all that data and we use it to educate our users on what a deal looks like. So you can see like what a deal is in St. Louis versus Chicago versus Dallas versus Philadelphia. A lot of investors have a universal approach to attacking deals, and they can go in and be like, okay, let's just do the 70% MAO formula, maximum allowable offer. And they use this approach to make offers, but what that causes them to do is to either get into a deal they shouldn't be in or miss out on a deal that they could have been more aggressive with their pricing or their negotiation, and they miss out on opportunities. And so what our system does is it shows the local market realities of every single market. So you can see that maybe in Chicago, I have to get properties lower than say 55% of the ARV for me to be competitive, because that's what investors in that market are doing. In LA, I might be able to go up as high as 75% of the ARV because it's a different market and it's a different price structure. And that's, if you want to operate in that market in Los Angeles, the strategy is completely different. When you're really in the business, you have to base your approach on that local market. And that kind of data is not available anywhere else. You're not going to go and figure out these local market subtleties from a book or a podcast or listening to some guru teach them their proprietary strategy on how to find off-market leads. It's not going to work, right? So these local market things is what will make or break an investor or a wholesaler, whatever you call yourself. And we take all that data and we track it. And then we actually just got up our patent, which we had submitted over 4 years ago for this thing we call comparative search. And the comparative search is proprietary. Obviously, we got a patent on it. And it's basically an algorithmic approach to taking all of the successful deals, all the successful strategies in a particular market, and then essentially using those as a model and reverse engineering it. With a click of a single button, you can see all of the deals that are done and do your local market research, become a local market expert in a matter of minutes, which used to take years. Then click another button that says, find deals that I can buy right now that are just like all the ones that just closed recently. So essentially, instead of having to recreate the wheel and have all of this market knowledge that you would have to attain over years, you have instantly. And the algorithm does the heavy lifting for you, because we both know that most people aren't doing this full time.
I love it because with the background in real estate, a lot of real estate professionals really feel like they've got the insider information because they've got access to their local MLS. What I saw the key difference is you have access to the MLS data across the entire country, and then you've packaged it with filters. Like you'd said, you can fine tune exactly what you're looking for as far as the purchase price goes. So now you know what you could acquire the property for, you know what it's selling for, you know what the investors have bought it and then flipped it and resold it for, and you can track, and I thought this was the coolest part of it, what the properties are actually renting for. So you'll know if it's a good investment because you're fitting so many different types of clients, if you will, because if you're only selling retail to someone who's going to live in the property, it's a completely different mindset than if you're selling to an investor who is planning on either flipping the property and turning a profit, or if they're planning on a buy and hold strategy where they're going to rent the property long term. You're not going to pay $400,000 for a property if you know that your maximum rental potential is $2,200 a month. And inside the program, you can see what's going on in the rental market. And that information is just not available in a very clear way on any of the platforms that you could just log onto the internet and get. People think, oh, why would I pay money for these services when the MLS is syndicating the data already? You can get rental estimates out there as well. And what I've learned is if it's free, you're typically the product. If you're paying for it, you're the customer. And having a platform that you're paying to get this type of data for is just awesome. And when you're looking at not just doing a deal in Sarasota, Florida, so if I only care about my MLS, then that's all I really know. But what if I'm trying to access the full state, or I'm trying to look at property in North Carolina? All of a sudden, this platform opens it up for you. So very cool.
Yeah, it does. So real estate investing, it's comparable driven business. So your property is only worth as much as investor activity around you. So if you are fix and flipping, you need to be in an area where there are houses that are being fixed and flipped. Those are the comparables that you're going to need to use, the value of the property in which you need to offer on it to make the margins work. Unfortunately, a lot of investors, they invest based off of proximity, what's close to them, where they live, what's comfortable or what they think they know. So this leads them to markets like where they potentially lived in, or their friends and family live, because they think, okay, boots on the ground. If I know somebody who lives in Cleveland, it's going to be easier for me to invest and have success there because I know somebody there. All of those reasons are not good reasons. The only thing that matters is the economic in that market. Most importantly, the investor activity. So you don't want to go and look for a fix and flip or a wholesale deal or any strategy where ARV is the measuring stick. You don't want to go in any market where ARVs can't be established. So there are markets where people just aren't flipping. And we track all that nationwide. So we essentially created a heat map where you can see every single fix and flip that happened in the nation. And we code it in a way to where you can visually see without any complicated graphs or pie charts or a spreadsheet with data that's just not consumable. We visualize this in a way where even the brand new investor can be like, oh yeah, that's the hot area, because it's visual and it's really easily consumable from beginners all the way to experienced people. And then they can say, shoot, I live in Kansas. No one's flipping there. If I go spend my hard-earned money and my valuable time trying to find a deal in Hays, Kansas, I'm going to fail because there's not enough data there to make everything else work. The comps aren't there. And so I can't prove to myself what after repair value is, let alone prove to a buyer after repair value is, or an appraiser what after repair value is, because that data just doesn't exist. So I created a term called the reverse REI strategy. And essentially you leverage data to reverse engineer where you should be spending your time and your resources looking for deals, knowing well in advance that if I can find a property that needs some work, or I can find a motivated seller, it's going to be in a neighborhood where the comps that exist that will help me establish value in that home and make everything else fall into place. So if you use that reverse REI strategy, you're going to put yourself in the best position, regardless of the source of the lead, whether it's on market, off market, it comes from some other lead source, you're doing pay-per-click. If you are investing time and money there and the comps aren't, then you're wasting your time. Why invest marketing dollars? People are having so much trouble, motivated sellers, and getting people to respond. Why would you invest any time marketing in an area where there's no comps?
They taught us that as real estate 101 as an agent coming in. If you're looking to farm a specific market, you really need to understand the turnover rate in that neighborhood. Are the homes turning over? Because if you're sending postcards, you're paying for that postage stamp every single month to that same neighborhood, and they've got a very low turnover rate, then like you just said, you're more likely to fail. So with that said, most investors do look at their backyard. That's going to be the first place that they start. How do you recommend a client that's coming into Privy select their location or their state going in? Because for me, I'd say, I'm going to pick Florida. But like you just said, maybe Florida's not really the state I should be looking at. Do you offer any advice when someone's coming into the platform as far as choose carefully? You don't want to waste your money. You don't want to waste your time. How do you do that? I'd like to thank today's sponsor, CostSeg RX, a cost segregation company. If you're interested in a cost segregation study, log on to realestateexplainer.com and click the cost segregation link at the top of the page.
Newer people who are just starting off, or people who are founding a new niche or exit strategy, the odds are already against them. The chances of them succeeding are less than 10%. It's closer to zero because there's so many other things they're up against. So even if you're in the best market, you choose the market correctly, there's all these other things that they have against them that they have to overcome, like their ability to negotiate, their salesmanship, access to good data, runway, because you mentioned the real estate example a couple of times. What do they tell them? Have 3 or 4 months of reserves in the bank, because that's how long it's going to take to get a deal and get a commission. A lot of people who fall into this bucket of wanting to do real estate, they see all the headlines and they see the gurus and they just highlight all of the success stories, but they don't tell them the realities of how difficult it is to succeed, because it's like any other business. This is not a rich quick scheme. It's something you have to work at. So you need a good runway to be able to figure all the stuff out before you're going to get that first check. And most investors are going to quit after 30, 60 days because they just don't have it in them to push through and overcome all the obstacles that are going to be presented to them inevitably. So they don't have enough runway and they have all these things they got to solve. So this is why so few people make it. It's less than 9 out of 10 people will ever have any success in real estate investing. The Pareto principle, right? 80-20, it's way less than that. And unfortunately, that's not what people talk about, especially the gurus who want to sell you some expensive proprietary software or program that's going to make you rich overnight, right? They don't want you to know the real story. For new people coming in, data is probably the shortest path to success because you can look at what other people are having success with, not what some guru did or taught their top student to do. Like enticing. Here's all the fix and flippers. Here's all the landlords. Here's what they base your strategy off of what is working in their market. And it isn't, what would you say, Mac as choosing. When we're thinking about comparables, we're talking about distance of a half a mile or less. So even if we said, okay, like Tampa is the hottest market in Florida right now, it isn't just Tampa, right? It's like it's Seminole Heights because there are areas of Tampa that don't make sense. But when I look at the map as an experienced person, I can see the same thing that a beginner can look at, and I can see, oh, this is the neighborhood I want to pull my list from. I can sample and say, okay, here's the top 3 zip codes in Tampa that are around Seminole Heights where all the investor activity is and where my comps are at. So I'm going to only send postcards to those 3 zip codes, which is going to make that return on investment for those marketing activities higher because I'm being way more intentional about really being laser focused on specific neighborhoods. Because when we're thinking about comps, especially around cities and urban areas, those comps need to be within about a half a mile of where you're located. Maybe it's a little further away.
It could be block to block, depending on the city.
So this is the strategy, like being local, market specific. If your backyard where you live is not high investor activity, don't bother with it. Could you stumble into a deal looking for deals in Hays, Kansas or Sioux Falls, South Dakota? Maybe. Can you build a business around it? Can you build a repeatable, consistent business where you're getting deal flow where you can start to scale up your operations? The answer is no. The detail to be able to do that, the ingredients you need to be able to assemble a deal are not present there. So they shouldn't be wasting their time there.
And I love that it's not just the neighborhood that you can target. You can go in and you can look at the individual properties within that market and you can check the on and off box to remove properties that may be skewing the numbers. So maybe you've got one property that was an outlier that sold for over market value. It's just not in the range. Or you've got a property that is showing that it's renting for $1,000 or $800 more than all of the other homes. You can unselect that box and all of a sudden it'll show you the other homes that are available. And maybe you'll see that what you thought was a good opportunity isn't that great of an opportunity because literally it was only 1 or 2 properties that were boosting the numbers up.
Yeah. You point out something that's important. And it was a decision we had to make over the years because there's this concept called an automated valuation model, an AVM. The most popular AVM in history is the Zestimate. This is from Zillow's $1 billion Zestimate, which to this point, historically, investors who know better don't trust. They know it's wildly off because this Zestimate, number one, it doesn't have anything to do with ARV. It doesn't have anything to do with cash flow. It has to do with what do they think a house will sell for based off of comparable sales. And those comparable sales, majority of them are retail sales. Somebody buying a house to live in. It has nothing to do with improvements. If it was fix and flip, it has nothing to do with cash flow. So that number doesn't represent anything that is helpful to a real estate investor. And what we decided is we weren't going to use the automated valuation model many years back is because it was misleading for investors. And so what we do is when our system is actually building what's called a comparative market analysis. It's just a fancy word for a property report, comparables, bringing in data from multiple sources, MLS, public records, county record data, our rental sources, and others into one report that's live. And this CMA is a live, meaning it changes over time as the data changes. So if there's a price reduction, you'll know about it. If there is a status change, you'll know about it. If the comp set changes with the new data point from when you looked at it last week to today, it will change. So all that data is live in this comparative market analysis. So we're analyzing every property in the US with this thing behind the scenes. And all you're doing is you could just type an address and it'll pull it forward. It'll give you the comparables today. Or if you did a search for deals inside of Privy, we'll show you all the matches. And then we'll show you the CMAs that are attached to those to show you why we selected that property. And this is important. Why the Zestimate doesn't work or why an AVM doesn't work is because it does take into account these outliers. And it factors those into what the potential value of that home is when really it doesn't matter. We don't care a house sells for that's unrenovated if we're doing fix and flip or wholesale or BRRRR. We don't care what a house sells for if we're doing a rental property, because all that matters to us is cash flow and how we measure it: cap rate, gross yield, annualized return. All those things are what we care about. So we stopped using AVMs and now we provide the comps. But then we say, okay, based off of what other investors are doing in the area, here's the rents for that house that you're looking at. Oh, if you're thinking about wholesaling or fixing that property, here's the other flips in the area. And so with this concept of reverse engineering, there is another step after where we click to see all the activity. Then you have another button that says, show me active deals I can buy today. Active deals you can buy today are based off of, number one, the local market, but also another variable you can't get in any other software. And this is where you're looking for discounts. The MLS can't do this. No other software can do this. Our comparative search is patented. So if you realize from doing some local market research, say in St. Louis, that you need to be at 55% of ARV or lower for it to be a deal, you click the one button, you make one adjustment, lowering that percentage of ARV to 55%. Now it's comparing the ask price of the home to the fix and flips in the area, and it's showing you that you can get this property at a discount. And we give you all the data that proves it. And then we show you the before and after all the flips in the area. We show you what they bought it for, what they sold it for, show you who those players are. Earlier, I mentioned that if you're doing wholesale, you want to work with people that are actually actively doing flips or who are actively landlords. Show you all those players. You can actually export those lists right from Privy and go and skip trace it and build a buyer's list of active people that are doing deals today, not people who were active a year ago on an entirely different economic foundation compared to today.
So you talked about Privy also acting as a CRM. Are you guys taking off-market deals and hosting them on the platform itself, or are you connecting the dots? I can see that you can download the list of buyers that are actively buying those properties at the discount because they've recently bought them. Are you guys hosting off-market deals currently?
No, we don't host off-market deals.
You're enabling people to find the deals and find the buyers. Okay, I got it.
Right. So earlier I said CRM because we're not a CRM. CRM is customer relationship manager, right? So this is where like managing your leads, all those sorts of things. We don't do that. There's 1,000 CRMs out there.
This is data. You're sourcing the data.
But it's extracting value from the data. So a good platform that's out there that some people like to use is this one called PropStream. PropStream is the list builder, and they are a company that you can do some CRM type activities. They have some marketing functions too. We don't do those, the marketing function. That's a whole other ball of wax. But if you did want to pull a list of, say, foreclosures or absentee owners or vacants or tired landlords, you can pull those from Privy, and we're going to analyze all those for you. Worth looking at, right? It's not just building a list.
Because you can become a hero, not only if you're looking to acquire properties yourself, but if you're working with other investors, now you've got the data set to say, here's a deal. I can actively bring you this deal, and here are all the numbers, move forward and acquire the property. So it's literally finding that needle in the haystack. So I have to ask, if we talked about your move into multifamily property, syndicating deals, is this another software that you currently have under the hood that you're working on for multifamily properties? Because it's the same.
No, I don't currently have any plans of baking anything like that into my personal syndication strategy. Evaluating a multifamily property is way different than analyzing a single family property or a small multifamily, like a duplex or triplex. At some point, comps don't really matter. Now, there are traditional comparables. There's still data points that are valuable when you're looking at analyzing a multifamily property. It's mostly, rents, cash flow, comparing. It's a balance sheet. It's a P&L. Like you're comparing what you can run the property for, what it takes to run it, and what the revenue is that's coming in, which is typically rents. And those models exist. There's hundreds of spreadsheets out there that people can find to analyze a multifamily property. There's some other things you can take into consideration, like appreciation. They can factor in a bunch of other things, but it's a whole different business.
Yeah, the calculation's different. Instead of looking at the market comps, what's recently sold, you're looking for your return on investment every single month. What is that property bringing in? Yeah, very interesting. And that's going to drive the property value as well. So if you're going in and looking at multifamily or commercial, then you look at value adds. How can I drive the value of that property up? How can I increase the rents?
Increase the rents, lower the costs. That's where the value add is. And value add can be efficiencies too, like getting rid of a bad manager. lowering insurance costs. Like a maintenance company that you have manages just keeping the property up, who's charging too much to one that's charging less, but still provides the same level of service. So it's more decision making in management operations where value add can be in the multifamily space. And ever since I've been investing, so over the last 20 years, I talk about this with people I know and people in my sphere, and people have always said, what are you investing in now, Benson? Like, how can I help? I found PMLs through that, and it's like low leverage. And so over the years, as I've leveled up as an investor and my sphere has changed, and I have a podcast, you were on it. And as my world has changed in the real estate space, I realize that I can do more by leveraging multifamily than I can by going out and finding a single wholesale deal, which I've done. And I still will, but I'm not focusing on lead generation, single family wholesales. Let's just take time, for example. I could spend 10 hours doing a wholesale deal, from acquiring it, negotiating it, and doing the disposition. I could spend 10 hours finding off-market multifamily property and fundraising, right, on a multi-million-dollar deal. So the leverage is just way better there. And that's really what I'm looking to do with my own personal investments, is transitioning. I've basically almost sold all of my single family assets, and I'm transitioning all of that liquidity into multifamily deals.
How do you look at the market when you don't have a tool like Privy, you're going into multifamily and you're looking at, let's say, North Dakota, like you had mentioned. How do you select the market when you're looking at multifamily compared to residential?
This is a newer world for me. I don't have a data-driven approach right now to solving that problem. I'm looking for it, but it all comes down, like, markets themselves are not as important, I believe, in the multifamily property as they are with single family, because it's so comparable driven.
Because then it comes back to the actual, we were talking about the cap rates. What's the individual property doing in that market? And if the property's been a good investment for established property, it's not new build, but it's got a history of rents, and there's some type of flaw or failure in that property where you can come in and fix it, whether it's management or could be just slight remodels and bumping up the rents, then that property may be the one to look at. So I like that it's not necessarily, and again, this is a transition from residential to multifamily and the different things that actually drive the property. So that's a great insight.
You can't ignore the market though. Like, those do play a factor, right? Like, if you want to buy a multifamily property in an area where no one wants to live, then that's just not going to work, right?
But they're going to want to live there someday.
So you are paying attention to some of the economic factors. Is this a place that people are moving to? Is there demand for rents? Are rents going up? Is there consistency there? And those are all things you need to pay attention to. I'm still working that into my evaluation model of what the best way is to find those areas right now. Fairly opportunistic by just being in the circles of people that are doing the thing. Remember earlier with Privy, we'll just do what other investors are doing. That's the shortest path to success. I'm doing it in my own way, which is I'm joining masterminds. I've just joined this mastermind/technology provider platform called Avestor. Amazing platform where they provide the technology to be able to do fundraising for projects, supply that information to your potential investors. And then when they do decide to invest with you, they have this really cool platform they can log into to see how much money they've invested, how much money is allocated, their return on their investment. And it's also a community. So I'm in this community with a bunch of other fund managers who are actively out there raising money for deals. And we all get together and they present their deals to me and I present to them. And so we got this cool place where I can basically do what other investors are doing without having to rely just on the data. It's more anecdotal and looking at what people are doing than it is based off of data. And so that's how I found that opportunity in North Dakota, which originally I was a little skeptical of, because I'm like, who wants to live in North Dakota?
It's cold, it's windy.
Yeah. And so doing a little bit more research, I realized, oh, wow, North Dakota is a thriving oil and gas. So there's a lot of natural resources that are coming out of the ground there. And so a lot of people who are in the oil and gas industry going and pulling this stuff, and where the oil rigs are in areas in North Dakota. In this area more specifically is Williston, Watford City area. Everywhere you go, you see oil rigs. And the people that I met at another mastermind in Houston were from that area, and they're property managers. They're fix and flippers. They've got a construction company. They're vertically integrated, and they're coming across these opportunities all the time. And in this particular area, they can't build housing fast enough. So there's a high demand for rental properties in this area. And we found an opportunity that was owned by the city where they're transitioning out of property ownership, and they had subsidized housing for essential workers. And so rents are like at 60% of market. And so these kinds of opportunities are ones that I'm seeing. But if I was going to be prejudiced of that area, that I would never would have looked closer at this opportunity where the numbers just are great. And it is a value add opportunity. So the evaluation process is completely different. And being in the circles of people that are moving and shaking in this business, it's exciting. And I can't wait to see what's going to happen this year. My goal is 200 doors by the end of 2025 under management of properties I've found through this process and through networking and by going out and actually starting to fund and giving these people all these people that wanted to invest with me over the years, I've got these bigger opportunities where they can come in and get a good return on investment based off of these properties that we're finding and operating, and just helping them to diversify their portfolios from just the stock market, which, I mean, just in the last week, we've seen it go like this because of all of the AI stuff. It's so volatile, and some of the best, most stable investments you can get are in real estate.
There's no doubt about it. And before I let you go, I just want to ask, clearly 200 doors before the end of the year, it's a huge goal, and that's an awesome goal. If people want to find out more about what you're doing, what is the best way for them to reach out to you?
Probably the best way is to DM me. I'm on many of the social platforms. I'm pretty active on is Instagram. So if you just go to Instagram, I'm Benson_REI, and DM me there. I post a lot of content there, from podcasts to short little reels that are easily consumable. That's probably the best way to get a hold of me.
Thank you for being on the podcast today.
Oh, I appreciate it. Thank you so much, Brian.
If you'd like to get connected with today's guest, log on to realestateexplainer.com and click the Get Connected button on the homepage.